Good morning, hello and welcome to One Control's live stream. You're tuned into a fresh edition of Opening Bell with me, Lovisha Darad. Well, it looks like a good start today too, as the GIFT Nifty is pointing out to a positive start for our own markets. Even the pre-open rates are pointing out to a good start. Well, we have a good global handover to start with. US markets have rebounded after the AI-led sell-off. Even the Asian markets are in a trade are largely positive as well. The negatives, however, still for the markets are the yields that are still above that 4.5%. Even the US dollar index is orbiting around that 108 levels. Today we will be having the US Fed rate decision, and we will watch out what the commentary is, since they'll be meeting for the first time after Trump's swearing in as the president. Now, Q3 results will continue the sway action, and we will be discussing more on that. And also, don't forget to drop in your stock-related queries. We will take them up shortly with our expert. First up, let's take a quick look at the headlines this hour. Wall Street ends higher, Dow Jones rises over 130 points, while S&P 500 and Nasdaq bounce back after Monday's AI-led sell-off. Nvidia pops 9%, all eyes on Fed's decision, which meets for the first time after Trump's second term. Oil prices edge up on smaller than expected rise in US crude inventories. Supply concerns and demand also support the rise. Gold prices hold steady as dollar jumps ahead of Fed's rate decision. Bajaj Auto reports earnings better than estimates with margin about 20%. The management says that the company will outpace EV growth while maintaining ICE leadership. In key earnings today, Tata Motors is expected to post 6% rise in revenue growth, while Maruti is likely to post steady set of Q3 earnings. From the financial space, stable asset quality will be a positive for Bajaj Finance. After the demerger announcement and eventual spin-off, ITC Hotel shares will get listed today. Shareholders will get 1 share of ITC Hotels for 10 shares of ITC. Analysts are valuing ITC Hotels at 170 to 190 rupees, even as the last discover price was 270 rupees per share. All right, yesterday we did saw a good relief rally, but majority of the gains were paid in the last minute. Nifty couldn't hold above that 23,000 mark, and it did settle below those levels. But however, a good start yesterday after, it did snap the 2-day losing streak as well. What stood out yesterday was definitely the Bank Nifty index, and we will watch out if today also Bank Nifty index sustains the rally. But mid-cap and small-cap indices, they continue to depress the sentiment. Third straight decline came in yesterday, and we'll watch out if today also it is expected to trim any losses that the market is attempting to make. Today, what we need to watch out is definitely the US Federal Reserve's rate decision, which will be later on tonight. The street is already penciling in the Fed to hold rates steady. This comes amid the calls of Trump's tariff plan is also making the Fed hesitant to embark on any further rate cut path as well, because we have some inflation fears which is cropping up as well. But for our own markets, Q3 results, that will continue to dictate the market trends. Today we have the likes of Tata Motors, Bajaj Finance, Maruti Suzuki, Adani Power, all of them will be reporting their third quarter results as well. On the other hand, if you look at the primary markets fund, well, we have one new IPO which is opening for subscription, which is your Dr. Agarwal's healthcare IPO. The price band for this IPO is fixed in the range of 382 to 402 rupees per share. Moving on, let's look at how today's trade setup looks like. Well, first up on your screen is the option queues data. We can see that the Nifty put call ratio has risen to 0.95 levels from 0.75 levels in the previous session. So there is some kind of optimism which is kicked in and which is doing well for the markets as well. The next up on your screen is your F&O ban list. No new additions, no new retentions. However, the stocks that were out from the F&O ban list include the likes of IndiaMart, Intermesh, Manappuram Finance, Mahanagar Gas, PNB. All of these were out of the F&O ban list. And next up on your screen is the fund flows data. Well, FIs continue to sell. On the other hand, DIs continue to lend the helping hand. We can see the FIs have sold about 4,900 crore rupees worth of Indian equities in the last session. DIIs on the other hand, they have bought around 6,800 crore rupees worth of Indian equities. Now, just a couple of minutes before we go to the opening bell, and we can see that the pre-open rates are pointing out to a good start for the markets. Sensex is that around 200 levels. Nifty is also above that 23,000 levels in the pre-open rates. But yesterday we saw some good earnings coming out. We saw Bajaj Auto coming out with its earnings, where we saw that the net profit rose 3.3% year on year. On the other hand, revenue also rose by 5.7% year on year. Definitely, this was beating what we were expecting as well. On the other hand, exports led one of the key positives for Bajaj Auto. It surged about 22% year on year to 5.17 lakh units in third quarter, and EBITDA margins, however, stood flat year on year to 20.2% year on year in Q3. The stock has been plummeting since the month of October. It is down about 30% or so. We will be discussing how this stock is doing well and what it suggests on the charts as well with a market guest shortly as well. But what the brokerages are saying this morning, let's take a look. The brokerages are saying for Bajaj Auto is quite fairly mixed. Morgan Stanley is overweight on the stock. They're saying that the management is expecting domestic motorcycle industry to see a sustainable growth going ahead of about 6 to 8% coming in, and the management expects more than 125cc segment to recover as well. EV portfolio, including the PLI gains, is now EBITDA positive, and within two-wheelers, new Chetak 35 platform is supporting the margin improvement that we saw in the quarter as well. Flat margins, however, some sustainable growth that came in for Bajaj Auto. On the other hand, Citi is has an opposite view. Citi has retained a sell call on the counter and has given a target price of 7,900 rupees per share for Bajaj Auto. They believe that the expectations of 6 to 8% year-on-year volume growth for the two-wheeler industry over the near term is quite positive. However, the focus is on margin, and rich valuations are preventing them to retain their more constructive view on Bajaj Auto. We'll also be seeing a couple of automakers will be reporting their Q3 results as well. We have the likes of Tata Motors and Maruti Suzuki will also be coming out with their Q3 results. As per money control estimates, we can see that Tata Motors is expected to see a record of 6% year-on-year increase in revenue. On the other hand, the company's net profit is projected to fall about 7% year-on-year. On the other hand, if we see Maruti Suzuki numbers, how they're going to pan out, well, as per money control estimates, we are seeing that the company is expected to see about 16.5% year-on-year growth in revenue. On the other hand, net profit is expected to surge about 15% year-on-year. So yes, analysts do expect a sharp uptick in revenue because driven by a strong product mix as well, higher average selling prices, and a massive 13% rise in volumes. But margins, however, for Maruti Suzuki could face a pressure because of higher ad spends and discounts as well. We also had some other brokerage calls coming in this morning after Suzlon posted a 19.5%, a stellar performance in Q3. They saw about 19.5% rise in consolidated net profit. And also the renewable energies makers' revenue from operations rose about 91% year-on-year. Expenses, however, increased by 91% again for Suzlon Energy as well. So good numbers coming in for Suzlon Energy as well. Let's take a look at how other also. There were other stocks also that reported some Q3 numbers as well. We can see the likes of BHEL, a new Nifty 50 entrant as well, that reported its Q3 results, and the revenue has surged about 32% year-on-year. On the other hand, profit also more than doubled in the third quarter on a year-on-year basis. Some good brokerage calls coming on BHEL. We can see that CLSA has given an underperform call, and Morgan Stanley has also given about an overweight rating on BHEL. With just a couple of minutes, less than 5 seconds to go before we go to the opening bell, we are hoping for a good start. 23,000 mark, that is the key level that we need to watch out for today's level, and mid-cap and small-cap indices, that will be watching out how they are going to perform. But first rates ticking and trickling on your screen, well, we have started about, let's see, this is the, we'll just change, this is the Nifty 10-year benchmark GSEC, but we'll be changing what is there. But first rates coming in, and that is your Nifty at 23,000 mark that we'll be watching out. and it has opened strongly. 3.3 of a gains coming in for Nifty 50, and Sensex is also opened strongly, extending the relief rally to the second day as well. Sensex up about 250 points above that 76,172 levels for Sensex coming in. If you look at India Wix, that is fairly in the green. 0.4% gain coming in for India Wix above that 18 odd levels. If you look at mid cap and small cap indices, after seeing a pain for the third straight day, today it has snapped it, but we'll see if this good hold gains of mid cap and small cap indices sustained throughout the day as well. Mid cap about 0.4% gain coming in, small caps 0.1% gain coming in for the small cap indices as well. What is doing well among the sectoral pack is definitely your Bank Nifty index is holding well, 0.2% coming in. Pharma index, after yesterday's loss, again it is holding up well, 0.2% gain coming in for the Nifty Pharma index as well. So all of the sectoral indices have turned in the green except the PSU Bank index, which is seeing a bit of a profit booking and down about 0.1%. Let's take a look at some of the top Nifty gainers at this point. Bajaj Auto doing well, up about 2% after Q3 results did beat street estimates, and we did mention that brokerages have retained somehow a mixed call on Bajaj Auto on the counter as well. Cipla also doing well, 1.6% gain coming in after Q3 results did beat street expectations as well. Infosys, Wipro, Tech Mahindra, some of the IT stocks featuring in the top Nifty 50 list, seeing a gain of about 1% each. ICICI Bank doing well, Bharat Electronics after two-fold jump in net profit, more than 0.5% gain coming in for BHEL as well. Let's look at some of the top losers on the Nifty that include the likes of BPCL, seeing a cut of about 1%. HDFC Life, 0.7% cut coming in for HDFC Life. JSW Steel, 0.4% cut coming in for JSW Steel. NTPC, SBI Life, all of them featuring in the top Nifty 50 losers list. But on that note, let's quickly get on board with our technical expert of the show. We have Rajesh Palvia of Axis Securities. Rajesh, good morning. So good to have you.
Good morning.
Rajesh, Nifty has been flirting with this 23,000 for the past couple of days. Today it has again opened above that 23,000, but do you expect this to sustain for till the budget?
So, market was in oversold trajectory, and market has witnessed a bounce from a very important support area of 22,800. Yes, in the previous day also we have managed to cross 23,000 level on an intraday basis, but not able to sustain around those level. But looking at the put base concentration, which is adding up at 22,900 strike, that clearly shows that this level may act as a good support area for next couple of days. So maybe yes, towards the expiry, we believe that some more relief rally or some pullback may extend in the market, as global market is also now supportive and stable in the previous day. So I think yes, this really can extend to 23,100, 23,200. But yes, on the higher side, 23,200 is the critical and stiff resistance for this pullback. Until the Nifty not crosses those level, there won't be any comfort to hold the position. So I think around 23,200, maybe we may see again, short seller may, start shorting the market, as structure is still weak till we are not crossing and hold about 23,200. For Bank Nifty, again, 49,200, 300 zone is the important supply zone. If at all Bank Nifty crosses 49,300, then this short covering can extend, and then we may see another round of rally towards 49,600 to 700 zone. But till the time Bank Nifty not crosses those level, we may remain in the range of 48,600 to 49,200 for some time. After a brief consolidation, maybe Bank Nifty may also attempt to give breakout above 49,200. So at this juncture, one should hold the position for Nifty as well as for Bank Nifty. For Nifty, your stop loss at 22,900. For Bank Nifty, your stop loss should be at 48,700.
All right. The resistance for Nifty at 23,200 and Bank Nifty at 49,200. But how does the Nifty mid cap and small cap look like, Rajesh? Because third straight day of decline yesterday. Today, however, we can see a bit of recovery in the mid cap and small cap space. But how do you think that traders should approach it?
So some recovery we have witnessed in the Nifty mid cap as well as in small cap, but till the Nifty not crosses about 23,200, I think mid cap will also struggle to give any substantial pullback. Maybe as some buying action from oversold trajectory is happening, so some pullback would be there. Around 52,200 would be the immediate supply zone for Nifty mid cap index. So that level needs to watch on the higher side. If at all we crosses above 52,300, then some short covering or some more buying action we may see in the Nifty mid cap also. So on the downside, 51,500 is the immediate support area. Though structure is still weak for Nifty mid cap as well as for Nifty small cap. And I think if Nifty not able to hold out about 23,000 level, so here we may again attract some supply pressure in this space. So one should be very selective in the Nifty mid cap space as well as in the small cap. One should not go aggressive at this juncture. Still, we are in the bearish zone for the most of the indices.
Okay. All right, let's take some stocks in focus. Bajaj Auto, one of the top Nifty performers for today, seeing a gain of about 5% at this point of time. But Rajesh, how does the stock look like? Do you still find the valuations quite expensive for Bajaj Auto, because it has plummeted about 30% since the month of September?
So most of the auto stocks have corrected significantly in last couple of months, and Bajaj Auto is also behaved in the same manner. It's almost a correction of 3 months, and now today it has shown a very strong pullback action. But again, in the pullback, stock is still trading below to its 50-day moving average, which is placed at around 8900, 8950 kind of zone. So until the stock not crosses over 8900, 8950 zone, trend is still remain on the weaker side. So I think in this pullback, again, those who are stuck in the positions, they will try to, exit from their position. That will lead to a supply pressure in the stock at higher level. So 8900, 8950 is the immediate supply zone. Till that stock may attempt to move around those level. Those who are already long in the trade can hold the position with strict stop loss of 8700 or upside target of 8900 to 8950. Again, either.
Okay, all right. That's the view coming in from Bajaj Auto. Let's take another stock in focus. That is your SBI Cards. Well, the company is not reacting positively after following its Q3 results. The stock is down about 1%. We did see that the company's profit dropped about 30% year on year in Q3, while revenue slightly rose about 1% year on year. Asset quality, on the other hand, on an annual basis, saw a bit of an improvement. Rajesh, the stock did see some brokerage upgrades after the management indicated the asset quality concerns would not be a worry. But today, after following the Q3 results, the brokerages have been a little cautious on the note that the management hasn't really provided any guidance on credit cost and everything. But past 1 month, the stock has been doing well, up about 13%. But how do you expect the stock to pan out? Do you expect some pressure continuing in the near term?
So Lovisha, if we analyze the structure for SBI card, stock is trying to form a bottom after the significant correction. Stock is holding it's a near-term, short-term moving averages, 20-day moving averages and 50-day moving average. Though there was some pressure in today's session, but still till the stock is holding about 720, I think there is a chance that stock may again give some pullback action towards 760. That's the immediate hurdle for the stock. If at all stock crosses above 760, I think we may see some short covering action to trigger in this counter, and then possible rally can extend to 780 to 800 zone also. So those who are already holding the position and having a positional view can hold the position with stop loss of 720. Maybe once market stabilize and once the supply pressure after this earning would settle down, I think this stock may give upside momentum of 760, 780 zone.
Okay, all right. Let's take some viewer queries. They have been waiting in anticipation as well. Well, the first query is coming in from Gudela Hemant. He's asking that, he's holding shares of Suzlon at the rate of 73 rupees and whether or not this is a good time to average them. Suzlon at this point, it's hit a upper circuit in today's trading session after its a good set of Q3 numbers. 52 odd levels, however, he's seeing a bit of loss. What should he do at this point?
See, stock has corrected significantly as we have witnessed, broader market has witnessed a corrective move and power energy space has also corrected in this market correction. Stock is, now shown some pullback action from its critical support area of 47-48 zone. So I think if you have already bought the stock, should keep a stop loss of 47 if you are holding the position. Today, stock has already hit upper circuit. So I think hold the position with stop loss of 47. Maybe if market stabilize at this level, so I think this pullback can extend towards 56 to 58 kind of level also where you can exit because 56, 57 is the 20-day moving average. So I think again that level may act as a supply zone for the stock on the higher side.
Okay, all right. Let's move on to another stock in focus, that is your BHEL. Well, the company did report a profit which jumped over twofold year on year, and the revenue also saw a strong 32% year on year rise. Even the margins have expanded by 30 basis points. Rajesh, PSU packs were out of favor past few months. Do you expect to regain their momentum after the budget?
Most of the PSU stocks have corrected significantly in last couple of months, and BHEL has also corrected from its recent high. Looking at the overall structure, we believe that now from this oversold trajectory, yes, there could be some pullback action, but again, a budget announcement would be important for these all PSU stocks. What kind of capex and what kind of spending government announced in this budget and what would be the beneficiary, what all beneficiary stocks would be there from their announcement. Stock is now trading near to its critical support area of 190. That is the important and critical support area for this correction. If stock slips below to 190 level, then this down move can extend to 180, 175 level also. But looking at the recovery from the critical level, I think this recovery may extend and 202 to 205 would be the immediate level where we can see this pullback can extend. So those who are already long in the trade can trail their stop loss now towards 191. If it stocks not breaks below 191, I think there is a possibility that 200 to 205 level would be there in next couple of days where you can book profits. But for trader, fresh buying should be avoided as the structure is still weak for BHEL. So series of lower top, lower bottom formation is there. So until the stock not crosses about 210, buyer should avoid at this juncture. But those who are already bought at level lower level can trail stop loss at 191.
Okay, all right. Let's take another viewer query. Well, we have two viewers who is asking on the same stock, which is your Naveen and Satya has been asking on Bharat Electronics, whether or not it is a stock to add for the long term. Rajesh, how does the stock look like? Because the company is expected to report Q3 results tomorrow as well. But after, it did see some high in December, but after that, the stock has been plummeting.
So long-term structure for Bharat Electronics BEL is still on the bullish side, but for the near term to short term, there is some weakness in the stock, and stock has corrected significantly from its recent swing high of 336, 340 kind of level. Stock is in oversold trajectory for near term to short term. Maybe if stocks able to sustain about 250, 252 zone, then some pullback cannot be ruled out in this stock. And in this pullback, 275 to 278 may act as a supply zone. So around those level, one can book profits. So if you want to buy here, so keep very strict stop loss of 256 to buy this stock or upside target of 275 to 278.
Okay, all right. Let's move on to another viewer query. Satya is asking the next strong support zone for Hindustan Aeronautics. How does the stock look like on the charts, Rajesh? The company will be reporting, in the mid-Feb their Q3 results.
So again, HAL is also belongs to the same sector, defense, and we have witnessed, huge correction and supply pressure in most of the defense stock is in last, a couple of months. A lot of expectation towards the budget for this sector. What kind of announcement, what kind of allocation government announce in this budget that may give some bit of relief rally or some pullback action in most of these defense stocks. HL, if I go with the technical structure is already turned on the bearish side for near term to short term, as stock is continuously making series of low top, lower bottom formation. Stock has given a breakdown of its upsloping trend line on the monthly chart also. So trend is still on the weaker side, but yes, maybe towards budget if something comes for this sector can give some relief really. But again, in relief really, 3950 4000 may act as a major supply zone for the stock for any kind of pullback. So until the stock remains below to 4000 level, trend is likely to exhibit on the bearish side only. On the downside, 3450 may act as a critical support area. That level needs to watch in till the budget. If it's not break those levels, some pullback cannot be ruled out towards 3950 to 4000 level.
Okay, 3450 a key support zone to watch out for then. Let's move on to another viewer query. That is your Geetu Sandesh is asking the view on data patterns. She's bought it at 26.12 per share and she's asking whether or not she should hold it or exit it. Data patterns past 1 month, the trend is quite negative, Rajesh, but the stock is also at 2079 and she has bought it at 26.12. Bit of a loss she's seeing. What do you expect or what should she do at this point?
So again, data pattern, again, the same behavior like other stocks like HL, BL, and again, stock is attempting to give some breakout from the recent fall. But again, I think till the stock not crosses about 2250, 2300 level, trend is likely to remain on the bearish side only. But maybe towards the budget, some recovery we may expect in this sector. At this juncture, I would suggest to hold the position with stop loss of 2000. If it's not break below 2000, I think there is a possibility of pullback towards 2250 to 2300 for data pattern also, where 20-day moving average is placed. If stock crosses about 2300 level, then yes, extension of rally towards 2500 we may see in next couple of weeks. So hold your position with stop loss of 2000.
Okay, all right. Hold the position with stop loss of 2000. Let's move to another viewer query where Alex is asking the view on Amara Raja for the long-term entry levels. Amara Raja, how does the stock look like? Because if you look at 1 month, 11% downtake, 6 months also, 35% downtake. The stock has been spiraling down only. What can we expect in the near term?
Lovisha, can you repeat the
5%
please
downtake.
name
Amara
because
Raja.
yeah, okay. So again, Amara Raja has witnessed a correction in line with the market only. Yes, stock. If we analyze on the long-term perspective, long-term structure is bullish for the stock, but in the near-term to short-term basis, if we analyze the overall structure for the stock, that is clearly giving sign of some more weakness in the stock in the near term until the stock not able to cross above 1150 1200 zone. Maybe we may witness selling pressure to remain in the counter. So 1200 level is the key supply zone for the stock on the near term to short term perspective. If at all stock crosses those level, then continuation of uptrend would resume, and then possible target on the higher side towards 1600 we may see on a coming months. But at this juncture, I would suggest to hold the position with stop loss of 1000 rupees. That level needs to keep very closely on the monitor, and then if it breaks below 1000 level, one should exit from the position.
Okay, all right. Just one last question before we let you go, Rajesh. What are your top bets at this hour? We're seeing a bit of a consolidation, but what are your top shopping picks at this point?
So I think some of the NBFCs are looking attractive. Mannapuram Finance is looking promising. We believe that 205 to 210 would be the target in next couple of trading sessions. So here one can look to buy this stock with stop loss of 191. Another stock that we like is from FMCG pack, and we believe that some buying interest would be there towards budget in FMCG stocks. So Marico is our choice at this juncture as very stable structure in this volatile market, and stock is almost negotiating with its multiple supply zone of 670 75 zone. So I think towards the expiry, there could be a chances that Marico may attempt to give breakout above this supply zone and then possible target towards 685 to 690 we may see in the near term perspective. So Marico also can be looked at for buy with stop loss of 656. And the third stock that we like is again from the NBFC space, that is Bajaj Finance and Bajaj Finserv. These two stocks are looking promising. If we have to select only one, so Bajaj Finserv would be my choice. Possible target towards 1830 to 1850 with stop loss of 1750.
All right. With that, we have to let you go, Rajesh. But thank you so much for your time and answering our queries. All right, let's move on and let's take a look at how the markets are doing. Well, they're holding off well at this point. Sensex up about 200 points, Nifty also above that 23,000 level. So good start for the markets, holding well. But we hope that there is no sell-off that it emerges in the later half of the session as well. Among the sectoral indices, Nifty FMCG is seeing a bit of a knock, more than 0.5% cut coming in for Nifty FMCG index. Nifty Metal Index doing well, Nifty Media Index doing well, Nifty Bank Index also eking in the green as well. Nifty Auto Index, however, powering through a 1% gain coming in for the Nifty Auto Index, and Nifty Realty Index also more than 0.5% gain coming in. If you look at mid cap and small cap indices, after 3 straight day of losses, up about 1%, more than 1.5% gain coming in from the mid cap and small cap indices as well. But on that note, let's join with our fundamental guest for the show. We have Rishi Kohli of Incred Alternative Investments. Rishi, good morning. So good to have you.
Good morning. Good to be here.
Rishi, let me start off. What should investors do now? Because it's past couple of months, it has been just complete red on the screen, complete red on the portfolio as well. How should you expect investors to approach equities?
Yeah, so I mean, in some past interviews and articles that I write, I have been in fact mentioning since August, September that the period from September, October till March, can be difficult and troublesome. And obviously, the pace and the way it starts happening and the decline starts happening and the volatility that happens around it is never the same. So it's never easy to call it, even though that analysis is there. But largely, of course, the markets have been moving in line with that. The thing is that both from a technical perspective and some of the quant models and stuff that long-term cycles that we follow, based on that, we were getting this indication. And the October to January till now, the way it has developed, it seems in line with that completely. So till March, I would remain overall cautious from a larger perspective. And the issue is that some of the long-term signals have also started getting damaged over the last 1.5 months. If that sort of sustains, then the entire year could be a little tough overall, and there could be a lot of volatility that keeps happening. So that is the broader view. Within that, of course, we are currently few days back, yesterday, day before, the lows that we made. Those are in the short term a little oversold. They also come on a lot of strong long-term technical support regions. So a lot of short-term measures combined, from trend lines to indicators to about oversold stuff. All of this is sort of coinciding together. So I think in the near term there would be some respite. Next week to 10 days or 2 weeks, one could expect a bounce. But overall, I would be a little cautious for the next few months for sure. And depending on how those go and how these signals sort of develop, maybe even for the next 6 to 9 months, if not just the next 2 3 months.
Okay. Rishi, but we have been seeing, you said that you're a bit cautious for the next couple of months. We've been fearing that, as feared that Q3 earnings are also not panning out. Trump tariff talks are also taking place. But what key event are you watching out for any cautiousness for the market or any nervousness that could prevail in the market?
Events, is out there. Everyone is aware of it. We have the budget around the corner. We have the RBI meet after that. A lot of stuff happening in the US between Trump coming in and, probability changes on what the Fed would do next, etc. So I think that is the other thing, right? I mean, globally, a lot of macro sort of things are a bit all over the place, even globally, right? With inflation spiking now, sort of, slightly settling, but still, still uncertain. If I would think of it from 6 to 12 months perspective, interest rates, of course, they spiked a lot. They seem to be settling down. Expectations of some cuts, etc. But the overall picture doesn't give comfort that there is a trend out there, right, where the interest rates will keep getting cut or the inflation will fully stabilize. So any disruptions that happen and again make some of those indicators change, that will lead to a lot of issues overall for the markets. So I think that is one thing. When all macro is very stable locally, globally, then markets are sort of, remain healthy and those fears don't come in. But right now, both locally and globally, nothing is very, very stable. And the potential that next 3 6 months there are some disruptions here and there is still very highly likely. Even the US 10-year yields, for example, in the near term, they seem to have, stabilized a little bit. But from a long-term perspective, they clearly have room to move on the upside, right? So 3 6 months, maybe nothing happens, but what if something happens after that? Similarly, if I come to the local side, currency has been not so easy in the last few weeks and months. RBI has obviously brought out some measures to stabilize that. I think in the near term it should stabilize. But again, in the long run, we don't know, how that is going to shape up. Earnings have, as you said, not been coming through, and that's been the primary reason. I've seen that when the long-term sort of technicals or long-term cycles that we follow on the quant side coincide with some of the earnings, growth either improving a lot or declining, then that becomes a good indication. If both of those things coincide, then usually markets 95% of the time will behave that way. So this time again, the same thing has happened that, earnings have not been great. The outlook for the next 3 6 months is not certain. And with that, all the technical and cycle stuff which has been turning negative has obviously then fed through into the markets.
Okay, all right. Rishi, you mentioned that, the US Treasury yields could also move up. Do you expect it to breach that 5% mark? Because we did see in the mid 2007, the onset of, just days before the onset of Great Recession. But do you expect this time also to take place, or how are you watching out it for?
Yeah, so like I said, in the near term, no. In the near term, I think it will remain stable, maybe even decline slightly. But yes, from a 1 to 2 year perspective, if you ask me, I think we will see levels above that at some point.
Okay, all right. But Rishi, after this deep correction that we've seen and, fairly a very bad earning seasons so far also we are seeing, any pockets of value that you are finding valuable at this point of time or good buys in terms of themes?
Yeah, so see, I mean, I run a sector rotation model again on the quant side, and that gives some interesting, outlooks and signals at certain points in time. Because as we know, whether markets are good or bad, there are some sectors or some pockets which are always doing better, either absolute or at least relatively. And there, sometimes you do get some interesting contra signals or advanced signals of what is happening. What is interesting is that some of the sectors which had been holding up, like IT, metals, etc., till a month back. I think this month everything that had not got affected has got affected already. So that structure has started getting damaged across sectors. But even then, overall, the financial services index, ex banks sort of thing, so NBFCs and other financial services companies, somehow that sub index seems to be holding up the strongest, and also giving those signals that in the medium term, near term, as well as in the medium to long term, that is holding up much, much better. That will do much, much better. So that is one pocket which I would definitely look at. FMCG, of course, in the last 2 months has taken a big hit in most of the stocks, uh, and overall as a sector. So despite, traditionally being called a defensive, it has not really behaved in a defensive manner. But having said that, now it has come to certain levels overall for the sector where, again, in the near term, I think there should be some respite. And then within that, of course, there'll be pockets of stocks which will be more interesting as well. So that is something which, selectively can be interesting. Financial services overall. Banking, of course, in the near term, again, I think, it has got oversold, excesses are done. Technically, it's looking much better. Interestingly, the bank Nifty versus Nifty ratio, on which also we run some models, that is looking interesting. So I think Bank Nifty has the scope to outperform Nifty, at least over the next 1 or 2 months. So some of those things is what, I would use in the current markets. Overall, anyway, I run more long short strategies, and I think this market environment is perfect for those rather than just pure long. And being hedged or having certain long short or market neutral strategies may be much more interesting for the next few months at least.
Okay. Rishi, just one last question before we let you go. You said that, there could be treasury yields which could also rise up about 5% in the next 1 to 2 years as well. But Nifty has already fallen about, to double digit fall we have seen since the September peaks. When do you expect us to reach a bottom, and what does that treasury yield spiking and, crossing that 5% mark mean for Indian markets as well?
See, for Indian markets, firstly, like I said, near term, I think there is a good bottom. If it sort of breaks the recent lows, then we are looking at a much larger damage. If once it breaks that lows, then you are talking of another 5 to 7% on the Nifty opening up, if at least, kind of thing. So more likely scenario is that in the near term it bounces and then it comes back again to these levels after a month or two. So I would expect that sort of volatility to continue. Interestingly, there are a lot of parallels that the current fall has started having, both from a technical and a structural and a cyclical perspective, and even earnings initially, at least. Let's see how it pans out to the October 21 to March 23 period. Last 2 years post that has been very, very strong for the markets. So I think most of us have sort of forgotten it, but October 21 to March 23 was very painful. And there were periods when it went down 5-10%, markets came back up also, then again went down. But overall, both from investing and trading perspective, it was a very tough period, right? And most funds were struggling in that period. So initially, the last 3 months, the way it started, it looks to have a very similar parallel. Let's see if it pans out for that long or not. As I said, some long-term signals as we speak, certain monthly things that we follow, and obviously month end is just a few days away, are on the verge of giving those signals. Price damage is obviously not as much, to corroborate. So therefore, the short-term bottom thing may play out, and then later, if those signals sort of continue into next month, then I would be a little more worried for the entire year. For now, I would read it as more, volatility and sideways, so sort of a time correction rather than a larger price damage. But yes, if recent lows break, then that larger picture sort of comes in on the negative side. And of course, on the yield side, I mean, like I said, that is more a slightly longer term call. And near term, I expect stability. So I think near term, that is not going to really impact us much. But in the longer term, whenever that happens, maybe that coincides with, some volatility or some decline at that point in time. But, we'll know much more particularly only closer to that.
All right. With that, we have to let you go, Piyush. But thank you so much for your time. It was lovely talking to you,
Sure.
and we hope that we connect with
Same
you soon.
here. Thanks.
All right. Thanks.
Bye.
All right, let's take a quick check of the markets. Sensex up about 250 points. Nifty also holding well above that 23,000 mark. Mid cap and small cap indices lending some support to the market. Small cap indices giving up about 2% gains, which is coming in after 3 days of consecutive sell-off that we saw. India VIX up about 2% above that 18 odd levels. So we cannot rule out any volatility that could take place in the markets. Nifty FMCG index, the only stock sectoral loser at this point of time. Otherwise, all of them are participating well in the in the overall recovery of the markets. If we look at some of the top gainers on the Nifty, Bajaj Auto doing well, BEL, Wipro, Shriram Finance, all of them holding well, giving about 1 to 2% gains. On the other hand, top losers, we can see some of the FMCG players, like I mentioned, that was the only sectoral laggard. So we are seeing some of the FMCG players cropping up that list. We can see the likes of Tata Consumer, Britannia, HUL, ITC, seeing a loss of about 0.5% to about 1% cut that is coming in. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing about how the market has developed, what the stocks are in focus. Until then, signing off. Do stay tuned to moneycontrol.com for all the news updates and market insights.